now. Okay, so I'm sitting here with Annabel, and we're working together on a number of different projects. And we're just having a chat about what we do versus what a typical accountancy practice does. And I thought, you know what we'll do? Let's record it and we'll have a conversation. You never know, it'll be on a podcast and will be go viral. Yeah, one day we'll never know. So welcome, Annabel. It's great to work with you and to be speaking with you. So just give me a bit of background about your background and what you kind of do and what you do with precision.
Of course, thanks, Rob. So my name is Annabel. I am a chartered accountant and have been for nearly 7 years. I've worked in both practice and industry, and the biggest difference, I think, for me working in this kind of space, it allows me to have a much clearer understanding of your business because I've been a financial controller and I've been a finance director full time for these roles. And I think that's really pivotal for a business that wants to grow and expand and understand its figures going forward.
Yeah, fantastic. Yeah, I mean, I feel the same thing that I get involved in businesses, and having that kind of financial oversight within the business, it's so critical. We see businesses kind of grow because of that financial oversight. Is that right?
Yeah, 100%. And I think often finance can be seen as a burden rather than a forward aspect of the business. I think a lot of businesses put operations and sales first. And I totally get that. When you're growing your business, of course you have to put your sales first, and of course you have to put operations first. But there is a natural point in the business growth where you go, I need to understand what my margin is. I don't know what that is. I need to understand what my costs are. Are we wasting money? Are we not spending enough money? Are we on par with what the rest of our competitors are up to? And that progression can sometimes be slowed down by the perception of finance rather than what finance can actually bring to the table.
And that ties in so much with what we were speaking about before, because if let's
Yes.
say a typical sales coach will be focused very much on turnover and sales and getting that turnover in, and a typical accountant will looking they need to do the end of year accounts or the VAT return, and they're looking historically of kind of what's happened. Oh yeah, we need to get this strategy stuff in, but no one's
Yeah.
actually looking month by month actually what is the business actually doing, and what's the net margin, how much is the business actually making, what's the growth, how's it all working. No one's actually doing that in a typical business. It's astonishing, when you think about it.
But so the cases that I've come across recently where companies have owned businesses for 10, 15, 20 years. And when I've stepped in and they've gone, so, okay, let's review your gross margin. And they look at me and go, I don't know what that is. And I sit there and go, oh my God, how can you be in business for so long and not understand what your gross margin is? Because ultimately, everyone knows what their gross margin is. It's just they don't understand the terminology that the finance put to it, right? So it's a journey, it's a process, and it's education of what kind of an in-house accounting team can do versus what an external accounting team can do. I think that's the bridge that we're trying to gap here.
I think you remind me of two examples. One example is a company I've worked with. They've got over £1 million turnover, but they said to me, why don't I have money in the bank? And it came out that their net profit was less than £25,000. And no one was
Oh,
taking any big dividends. There was no big salaries. And it was like, and so no one had actually thought to go through that. Everyone's looking at products we're selling, doing well turnover. Our growth over the past years has been, but no one's actually looked at the net profit. It turns out that they were selling stuff, and their gross margin, i.e. the amount of money they were cost to produce it versus the selling, was too
yeah.
low. And therefore, because of that, they're almost making nothing. They're working crazy hours, for nothing. They're not bringing home anything. And the customers who are buying this stuff are basically almost buying it cost price. It's hilarious.
Wow.
And
Wow.
you know,
That's crazy.
another example is just now. I'm working with a client now, and they are busy from 9 till 6 every day. They're slogging their guts out, and they're
Yeah.
selling a product. I don't want to say in detail what this product is, but they're selling this product, and I said to them, "So how much is your turnover?" And they said, "Our turnover is about 150 grand."
Okay.
Wait a minute, you're selling something, you're working all day, all week. Your turnover is 150 grand. It doesn't make sense.
It
Something's
doesn't
not
make sense.
working, right?
No, 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 absolutely not.
And I think this is going back to exactly what we were saying, how without having that finance head in the
Yeah.
business,
Yeah.
how could you possibly expect to grow? How are you possibly expect to understand what's going on?
No, no, exactly. And I think it's businesses can grow without us, but they lose sight of a really big portion of what that business could be. Because the instances that I've seen is I've gone into a business and they're a cash cow. They're a cash cow, they're a cash cow, they're a cash cow. It's incredible. They're making more money than they could ever think they could make. But that's because they're in a boom period. And understanding your market when you're in a boom and bust is really important. And when you're cash cowing, it's really funny how businesses don't necessarily go looking at cost savings and things like that because they think, well, we're making money more than ever before, so why would we do that? And I always think it's so important, even if you're not making a lot of money, and even if you are making a lot of money, you still need to be as rigorous. You still need to be on the button because industries dependent on the economy, things can change, and you need to be able to adapt incredibly quickly. And when you're too focused on one area of your business and not the other, that's when you can really lose sight of the future of it.
I suppose you've probably seen businesses kind of go up and down like that in the boom and bust.
Oh, 100%. I've been in businesses like hospitality, when COVID hit with hospitality, no one expected that to happen. But, businesses that I was working for then, we were on a trajectory to kind of get opening to 30 pubs, and they're now back to two because there was no longevity in this kind of process. And it was such a shame because the principle of the business was fantastic, but it was running on debt. And if it's running on debt and not got an awful lot of equity in the business, it can then mean that when crunch times come, you have to make these hard decisions. So again, having those discussions ahead of time rather than aftermath is really important.
So I suppose people are going to ask, well, look, I've got an accountant. That's what my accountant does. How was the answer to that question?
Well, I think there's a real misconception as to what this is how I terminize it. So what I think that we do is called in-house accounting. We are with you day to day, week to week, month to month to help you with your business. And I deem external accounting to be what everyone seems to see as their accountant. They pick up once a year, maybe once a quarter if they're doing your VAT return. But they heavily rely on what you're doing and how you're putting that into the system and how you're processing your data. Unless you request that they are auditing that kind of information or that they are doing a real in-depth review, the likelihood is they're not going to be looking to see whether your margin is accurate. And I mean that in a term, and I'll explain in a second. They'll be looking for it to look reasonable. And reasonable is yeah, okay, that looks okay. I'm not going to look too hard into it. As a business owner, you want to understand the accuracy of your gross margin. And I'll use an example. I worked for a wholesale meat distribution business at one point for them, and they had a fantastic accounting company. They would jump in, do some aspect of the month end, some aspect of the quarterly activity. But no one ever did the margin analysis because the margin analysis was saying, this is how much I sold it for. This is how much I purchased the item. Here, therefore, here's my gross margin. But these guys were being commissioned. So their commission checks on a monthly basis was pivotal because the margin analysis had to be accurate for their
You
checks
mean
to
the
be
sales guys being commissioned?
correct.
Right.
So the sales guys, they're beavering away, sell, doing a fantastic job. But no one was ever going, this is the actual outcome of this sale, because all sorts of things can happen. Customers can request a refund, they might return the products and so on and so forth. So there's a lot more than just buying and selling, as we all know. And these margins could be 10 to 15,000 pounds out. And that means that these guys they're not getting the right commission checks, whether they're getting too little or too not enough. So it's so important that you have someone that's embedded within your business to help you. They don't have to be there 5 days a week, but they do need to understand your business really well and then help you and educate you as the business owner to this is why we need to do it and this is how we're going to do it.
Can I ask a bit of a tricky question? Do you think a typical traditional accountant is best placed to do this role as well? Because it's not doesn't normally fall into end of year accounts.
No, absolutely not. So it doesn't fall within our end of year accounts. And I've got the privilege of actually working in both practice and industry. I spent 5 years in practice and I've been 15 years in industry. Did I learn more about business being an industry? 100%. Working in practice, there's a there's checklists and tick lists and things that you go through, and you go through the motions as such to go, yes, the bank is reconciled, yes, the credit cards are reconciled, yes, this is done. When I was in industry, I really got into the mechanics of how business works, and that to me is invaluable. So for me, being able to see both sides of the coin, I think what we do is completely different to what an accounting firm would do.
Yeah, I also think so, and I think that from my background, I started in IT and project management,
Mm,
and so what I'm trying to do is also is close the loop, which is that we go do the financials, and we say back on the back of these financials, we need to make these changes. Now, a typical finance professional, I think anyone would probably say, well, good, look, this is what the results show. You need to make some changes, but
yeah,
what changes do we make? Or most people would say, well, I don't really know. That's not really my area. But that's my
exactly.
area in same
Exactly.
precision. And that's why I love that's why I kind of love what precision does because what I would do is I would then say, well, these are the finances. This is what it shows. We need to make changes there, there, and there. It
Yeah.
might be that, for example, now we're working with a business and we've realized that their margins are low. Their margins are too low
Mm,
because they've got major inefficiencies in the business.
mm,
So the fact that Precision is a Zoho partner means that we can
mm.
put together a really good CRM system to make them much more efficient. And I feel like that kind of closes the loop. So I think like kind of what we were discussing before this call was that you've got a traditional accountant, they're my accountant, but really that accountant wouldn't be looking at all at what we're looking at. They're looking at just the compliance side of things and just making sure the accounts are filed. And then the second side of that is closing the loop of like, okay, well, we want to build a business, and we've got teams in place to actually make those implementations happen from the change management or the IT perspective. So I feel like it's that's what prompted us to have this call, isn't it? Because
A hundred
there's so
percent.
much, there's so people just don't realize, what finance people do. Why they're
No,
oh, they're my accountant, and like there's so much more that goes into it that could be.
I completely agree. And I think, 20 years ago, 30 years ago, people like us probably didn't exist in a traditional accounting team. But they were probably just inputting data that had happened the week before, and they had not an awful lot of input into how the business was going forward facing. And certainly when I was started studying my chartership, that you could see that tide turning because we were as a as an economy we started embracing much more sophisticated technology to be able to build your businesses. CRMs, ERPs, and so on. They were very, very basic 30 years ago. They really were. But now you've got all these amazing products. I've worked with Salesforce, I've worked with Zoho, I've worked with NetSuite, all these amazing tools. But you only know what you know. And that's where, if you engage the right professionals, like you said, you're a Zoho partner. That's because you know it inside and out. So you know exactly what you need to do. You know exactly whether it'll be suitable or not. And you kind of you start straight away. You just hit the ground running. And a big part of what ACCA was pushing when I was studying, it was accountants being in the forefront of the business. That's where we should be. We should be sitting on the board. We should be uh, right next to the operations director. We should be right next to the CEO because we are just as fundamental. And the businesses where that person has been right next to the CEO, they have done amazing things because they embrace the fact that finance have to be there and they have to be part of the conversation, not just what happened last year.
Yeah, I think there's all sorts of statistics I found about how businesses grow significantly by having a finance professional on their team and on their board. It's interesting you said about the systems because I meet a lot of clients and they'll be using, let's say, a certain account system, whatever it is, and they'll be religiously putting in the information, really kind of scrupulously
Yeah,
carefully about. But then, no, but then when I say to them, okay, great, can I have a copy of your profit and loss or your balance sheet? They won't even know where to find it. So which
no,
means they're really kind of they're trying as best as they possibly can to
yeah,
really be diligent and to put all the information in. But they're never actually using that information. They're leaving it to their accountant, who kind of like
yeah.
just bashes the stuff in at the end of the year. But it's the funniest concept that they're doing the work. They're doing the bookkeeping all the time, but they're not actually taking the benefit from what that bookkeeper can actually give them.
And bookkeeping is like step one. It really is. Out of so many other steps, bookkeeping is step one. And for me, there's always a bit of a danger if you're not financially literate yourself within your own business and you hand it over to someone that you think, oh, they'll do a really good job, but you just don't know. You're ultimately responsible for that data. You're ultimately responsible for that filing. So for me, it's really important that part of this process, especially when you're working with precision, we make sure that you're educated onto what we're doing and how we're doing it and why we're doing it. We're not just saying we've done it. It's a whole thing.
So let's just take a step back and like what okay, so I think people will be thinking, okay, fine, that's the theory, very nice. But what actually do we do on a monthly basis? Things like variance reports and cash flow projections. Do you want to explain a bit more about what's that about?
Yeah, of course. So, like I said, bookkeeping is step one, and then the next step to that is the analysis and the evaluation of what happened historically. So that's typically known as management accounting. And in a management accounting process, what we want to do is say, on a very basic term, if this happened in this month, we want to account for it in this month. So if we have a sale that's happened in this month, we want to make sure the cost of that product has been matched to that sale. And also, if we've got people on payroll, we want to make sure those payroll costs have been matched into that month as well. So we're capturing the activity of the
Oh,
month.
so that's different to bookkeeping because what you're saying is you're saying
Exactly.
I've made a sale for this product X. Well, what's the cost associated to that product X? And a lot of time people don't necessarily associate the two.
Precisely that. And I think the probably the best example of that would be something if you pay for in advance, like you pay a year's subscription to I don't know, Zoom or something like that. You go, oh, fantastic. I've got a year's worth of subscription. I've got a fantastic discount and I've paid it all in one lump sum in 1 month. What we do, so the bookkeeper will account for it in that period, saying this is what's happened on a cash basis. And then I go in and go, oh, okay, this is 12 months. And then I do adjustments within the accounts to then say, now we're going to spread that cost over 12 months and make it representative because otherwise your P&L will be good doing this all the time. Up, down, up, down, up, down. And you go, well, oh, my margin's 10%, 40%, 50%, 100%. And it's nonsense and it's noise. So when we go through it, we carefully go through the activity, we carefully go through what's happened and make sure that we put it where it should be. Basically, we put the costs where they should be. And then from that information, we can give some good analysis and data based on what's happened activity wise. Ideally, we've got some good historic information that we can rely upon as well, so that we can do some good year-on-year comparatives. If you are say you sell ice creams and you only sell ice creams between July and August in the UK because there's never any more sunshine. You don't want to be comparing your July and August months with your January months because you're not comparing like for like. You want to be as comparative as possible. So the more data you have on your business historically, the better because we can be
That
more accurate with that.
seasonality aspect of it and things like that.
Yeah, exactly. And then from that, we also build realistic budgets for your business. So we can say, we think this is what we'll be able to do. If you think you'll be able to do this in revenue terms, it's all collaborative, as we well know. We discuss what we can do in revenue terms, what we can do with that new volume information. Can we save money on the product? Can we reduce throughput? Can we reduce anything to get that cost down? Then we see if we can be as efficient as possible with the remaining staff that we have based on that volume that we have. And a lot of the time, we end up seeing that the business expands to a point where it needs to then get a piece of software that's suitable for them so that they can contract a little in their efficiency. Because what you want to do is maximize the number of staff that you have, and they're not spending a load of time on admin because it's wasted. And that's the key thing, right? We want to look at what's happened in the past, look at what's happening now, and then help you with what the future also
And
looks
that
like.
future projection is probably, for me, it's where the magic happens because then do your 12-month of what is the business going to look like? It's almost having a crystal ball, isn't it? Like, so I've got
Yes.
like, what's my 12 months going to happen in the business? And if I
Yeah,
carry on like this, what will my net profit? What will I take home at the end of the year based on
exactly.
this information? And then I suppose the next part for me would be then tracking month by month what's actually happened and how does that compare to what we
Yeah,
thought was going to happen.
yeah,
A lot of the time when those kind of conversations of these when then these monthly meetings where we track the actuals with the budget,
yeah.
that's when like there's so much, we can then say, well, we thought this would be, we thought we'd have more money coming in. Why
Yes.
not?
Yeah,
Or we thought we'd have, or we thought we'd be, oh, we spent too much on operations this month. Why is that? And these kind of why questions, that's what builds a business. For me, that's
yeah,
what kind
exactly.
of grows something. I mean,
No, absolutely. If you're not monitoring these things and you're not you haven't got a goal to go with, and certainly not one that has kind of been robustly put together. You've had good conversations around it and go, yeah, this is what we think we could actually be able to achieve. Then you've got nothing to kind of aim towards. And I think having no aims and no goals and no, kind of tangible things to go for can also be a lack of motivation for people in the business as well. If you're bringing more people into the business, you want them to be, really striving for something because
like
there's
flying
all
blind, you've got
ultimately
no idea. We
is a
just kind of
purpose for
go.
something.
It's like flying blind, It's like, oh, it's very good. They say the analogy of flying over the ocean and just with no dial.
Yeah,
Like great. We'll see where we go. So I
exactly.
suppose what kind of business do you think would be best? Because obviously, a small business, in my experience, a business that's got less than three people in it, there's no need for precision. You just have to keep going and keep growing. A business is just a startup. There is no need for precision. Just go and just win those deals and just try to
Yeah,
grow. What do you
yeah.
think is the kind of the typical business which really could use someone in like precision or finance perspective?
I think it's a mixture of because it depends on the industry, right? If you're a one-man band and then you can generate a decent amount of income on your own, you kind of like you say, you're under three people. You're probably thinking there's not much point for us being in the business that kind of intently. But you're a business that has really gone for it and you've generated loads of good at sales. You've been bringing on team members way quicker than you thought, and then all of a sudden you go, wait, there's not a lot of money in my bank account, and I am now stressing about whether I can do another month. Of course, you can, but you have lost sight of the profit, the cash flow, and the future of the business because you've been so in the now. And that's when they need us.
I think the industry you said is so important because I typically find service industries are much more simplistic. It's a
Oh yeah.
case of, we got it, and even if they do have staff, it's very actually we do a lot of work about capacity planning, like
Mm.
how utilize other staff. But generally speaking, the model is much simpler. People who are buying stuff and selling stuff, that's
Yeah.
when it gets much more complicated because there's
Yes.
oh, I got a good deal coming, so I spent a lot of money on this stock, but then I'm actually making money on the stock. How does it all work together? All the dead stock and the age stock and all that kind of stuff. It can get very messy and very complicated.
Incredibly.
But at the same time, I think that if someone has a finance person in the room, then they should be able to increase their net profit by massive amounts because you've got that scrutiny of actually what we're doing in the business and
Yeah.
how we're doing it, and
Yeah.
if things can just go get out of control. Um, it's really interesting. So it's like
Yeah. I
no one
think
knows
I
about
think
this
the
stuff.
biggest well, perception versus reality, I think, always ends up being a bit of a shock for people when you go, well, this is what you perceived was happening. This is what's actually happening. And then all of a sudden they go, oh my God, I didn't realize. And then that's where you can kind of add value, right? Because from the off, you're going, here you go, have some information that is actually going to be useful to you.
So I suppose, I mean, as a final thought, what do you think people who are watching this, if they actually feel like, yeah, this really relates to me, what's the next step? What do you think they could be doing in terms of themselves or with us? What do you think would be a good next step for them?
I think for them, it's take a look at your internal team and think, do I have someone in here that is really, they've got a real strong financial background? And I would always recommend that they're chartered, especially at this level, because AAT is fantastic. I did AAT all the way to level 4, but it only takes you to a certain level, where chartership and ICAEW, all these different accreditations.
That means they're qualified accountants. I mean,
Qualified accountants, exactly that. They are part of a membership body, and they have studied to. It's the equivalent of a master's degree. So we've studied to that level. We take it to that level. We bring your accounts from being kind of monitored day to day by someone who's very competent to kind of get your day to day accounting to a certain standard, but taking it from that simple steps to strategy, that's where we step in. And I think if you're a business owner that's going, I don't have that in my team, but I need someone to help me. This is where we can slot in because we're not full time. We are as we're fairly frequent, but we're not full time, and that kind of bridges that gap for a lot of businesses. It's amazing how many businesses fall into that category as well. It's mad.
It is mad. I mean, look, we do a free audit as well. I do a lot of
Yeah,
free financial audits for people
yeah,
who are kind of thinking about should I do it or should I not do it.
yeah.
So yeah, I'd recommend if anyone's watching this, have a chat and get in touch. We'll
Yes,
be happy to help. Fantastic.
definitely.
Thanks, Annabelle. It was really nice to meet you
Thanks.
again. And
And
carry on. We'll pick up the call about our clients later on in the day.
thanks, Rob.
Take care. Bye bye.